Hi class, welcome back. We're going to continue with adjustments. In the previous video, we've gone over prepaid expenses, we've gone over unearned revenues, we've talked about accrued expenses, and now in this video, we'll be finishing up and looking at accrued revenues. And accrued revenue is when a business has earned the revenue, but they haven't been paid the money yet. So they've done the work, but just haven't received payment yet. Okay, the adjustment will record the revenue, and at the same time we'll record an asset. So we're going to debit an asset and we're going to credit a revenue. Let's take a look at an example. All right, so the example is on December 31st, the business has done some consulting work for a customer, a regular customer of ours. The work is valued at $1,000, and we're pretty sure we're going to get paid, and we'll get paid in January. All right. Now, once again, it's December 31st, it's year end. So we have to look at this transaction and say, did something take place? And yes, something took place. We need to record this transaction. So we will debit the asset, which in this case is accounts receivable, and we'll debit it $1,000. We're going to credit revenue, and we'll call it consulting revenue because it was consulting work. We'll credit that for $1,000. There's our adjustment. Debit the asset, credit the revenue. So now we've recognized the revenue. They haven't paid us yet, so we show that they owe us $1,000. All right, so that's pretty simple, and that's an accrued revenue. So once again, accrued revenues are revenues that have been earned by the business, but we have not been paid. So we're going to debit the asset, credit the revenue. At the end of the accounting period, the revenue needs to be recorded and an asset recognized since the revenue has been earned. So now we've gone over all 4 adjustments. Now, these adjustments are confusing, and I would recommend that you go through these videos several times to make sure that you really get them down, that you really understand them. The best thing to do is repetition at this point. Keep looking at these and looking at what we're doing and why we're doing it. In the next lecture, we will be covering the closing process. Maybe you've noticed that on the statement of owner's equity, we show a balance for the capital account. And that balance doesn't actually equal the current balance in the capital account on our trial balance. Okay? Well, in the next video, we're going to see why that's the case, and we're going to change that. All right, so I look forward to you coming to the next video and learning about this closing process. Good luck, class.